Shares of Uber are leaping higher this morning by 16% after revenue jumped 72% year over year. EBITDA came in higher than projected as well. Wedbush Securities Managing Director and Senior Analyst Dan Ives joins us with more on Uber's numbers. Dan, it's great to see you. First of all, the company predicted that bookings are going to continue to expand in the fourth quarter. What we've been talking about and what we're really curious about, is there any sign of pushback on pricing from Uber, which has gotten a little bit higher here? We're not seeing the same level of promotioning that we were.
Yeah, I think that's an important dynamic. I mean, we're not seeing as much promotion. Driver shortages are in the rearview mirror. And really what's happening is that consumers are really starting to accept those higher price points. That's important for anyone that's seen peak rides in major cities. I mean, price points are up significantly. And this is a tailwind for Uber. You know, and I think in terms of that guidance, this was a shock to the upside. I mean, Street was skeptical going in, and I think this was Dara and Uber flexing their muscles coming out of the pandemic.
Dan, if they're flexing their muscles, what does this mean for Lyft? Because I think we've learned maybe in the second quarter, Uber is doing so well right now, that may be coming at the expense of Lyft.
Well, Lyft continues to be the little brother to Uber, and I think that's been an issue for them. You know, promotional activities continue to increase. And remember, Uber has the global platform. Lyft continues to be domestic. Now, in theory, this bodes well for Lyft, but, you know, that's when they continue to trip over their shoelaces. And next week's an important earnings for them to really prove it, you know, after what's been a choppy road.
Of course, there's a lot of attention on the mobile and delivery, but some of the new tests that we're seeing Uber roll out might suggest that they're interested in getting more into the ad space, and some users seeing push notifications for other companies via Uber. What type of net add-on could this mean for Uber, and is that something that customers have even been asking for?
Yeah, I think, Brad, it speaks to like any of these global platforms, the advertising is going to be an opportunity. And I think that's something under the radar. Uber's going to further and further build this. They're going to control the software and the ecosystem, which is positive, not just for the company, but even for drivers down the road. And look, they're trying to walk a tight balance here because drivers need to be happy on the platform. Obviously, the labor law in terms of Department of Labor, employee contractor issue. So Uber knows that that's in the background, have to continue to sort of increase the monetization of the platform and let drivers make as much money as they can.
Let's talk about that Department of Labor issue for just a moment, right? Did we get any commentary about that from the company? And how are you modeling that? How likely do you think that there'll be some changes on the regulatory front?
Yeah, look, it's a big issue. Now, not as onerous as, let's say, the Prop 22 issue in California that ultimately went, you know, Uber and Lyft's way. But this is an issue. I mean, coming from the Beltway on the federal side, but I do believe the bark's a little worse than the bite. I think Uber and Lyft, there are some ways around this in terms of the contractor employee issue. If drivers are able to see where the rides are picking up and where they're going, gives them more flexibility. And some of these are sort of loopholes that I think Uber's getting ready for, because instead of battling this all out in court, I think there are some business model changes, slight, which could ultimately get around this. And this is going to be playing out for the next 12 to 18 months. But so far, bark's worse than the bite.
Dan, while we have you here, you're a big name, big presence on Twitter. How much would you pay to keep your check mark and use Twitter each month?
Look, and I think when you talk about the $20, I think it's obviously many have come out debating that. I mean, I think it's a smart move, right? And in terms of the monetization of Twitter, and even if you get a subset of that ultimately pay for that blue check mark, it just starts to move this forward in what's been a treadmill platform in terms of Twitter from a monetization perspective for the last 5 to 6 years.
Dan, we were talking earlier with Lauren Goodwin of New York Life, and particularly about some portfolios that have shifted purely defensive. But in tech, do you believe that we've started to see some of the bottoms be set in, or is there still more room to the downside that buyers should be aware of?
I personally believe the bottom's in the rearview mirror for tech. I think numbers have been cleared, decks have been cleared in terms of numbers. I think a lot of portfolios are positioned very underweight tech. And I think as we go into early 2023, even if there's a slight pivot from a Fed perspective, I think tech rips higher. And I think it's the most negative I've seen investors going back 2008. And so far this earnings season, despite last week on large cap, which was generally a horror show, especially with Meta and Zuckerberg and the Ted Stryker moment, it's not been as bad as feared.
And I know you're looking at the particulars for these companies, Dan, but you got to think that higher interest rates is going to continue to be challenging, at least perception-wise, for many of these companies.
Oh, no doubt. Look, I mean, obviously raising capital has almost become impossible now. And this is all just 10-year driven, right? The yield, that continues to be albatross on tech stocks. But I do believe relative to where the valuations are, what growth looks like going into next year, and now as they start to sort of come out of this, as we go on to the look on the other side, the economic storm, I think a lot of these companies are going to be better positioned than they were even pre sort of economic storm. But it's not all going to be treated the same, right? Even if you look at last week, you got Apple, then you compare that to Meta. So those are going in totally different directions. So I do think, Julie, it's going to be more of a bifurcation of tech rather than it all goes down or all goes up. And I think that's what we're starting to see play out during earnings season.